A Ripple executive just said something on camera that I had to replay 5 times just to make sure I heard it correctly. His exact words: the XRP Ledger's real-world assets are at $5.1 billion today, and a 100 times from here to $500 billion is going to be easy. Not speculative, not a price prediction from a random analyst on Twitter. This is Luke Judges, a senior executive at Ripple, saying this in a recorded interview. And right now it is all over X. Everybody is talking about it. But that is just the beginning of today's video. Because at the same time this clip was dropping, Ripple's UK Managing Director Casey Crock was on stage at one of Europe's biggest fintech conferences, alongside JP Morgan, Amina Bank, and Banking Circle. And what she said about where banks are right now in their crypto journey is genuinely one of the most bullish statements I have heard from the institutional side in a long time. We are also going to look at what is actually happening on the XRP Ledger with real-world asset growth right now. The numbers are staggering. And we are going to talk about where the price stands, what open interest data is telling us, and why the current moment looks very different from what the red candles on your screen might suggest. There is a lot to get through today, and it is all bullish. Let's go. Welcome to XRP Verified, daily XRP analysis built honestly for the US investor. If you are not subscribed yet, hit that button and turn on the bell. Let's get into it. Let's start with the Luke Judges clip, because this is the one you need to hear and fully understand. Luke Judges is an executive at Ripple. In a recent interview, he laid out exactly where the XRP Ledger stands on real-world asset tokenization and where he expects it to go. Here is what he said, and I am going to break it down piece by piece. At the start of January 2025, real-world assets on the XRP Ledger sat at approximately $50 million. That number, while small, was suppressed specifically because of the SEC lawsuit against Ripple. Institutions that were interested in building on the XRP Ledger were waiting on the sidelines. They did not know how the case would resolve. They did not want exposure to a blockchain that was under active regulatory attack. So they waited, or they went to other blockchains in the meantime. Then the lawsuit resolved. Ripple settled with the SEC. XRP was cleared as a digital commodity, and the moment that legal cloud lifted, the floodgates opened. From $50 million in January 2025 to $5.1 billion today, including cash collateral stablecoins, that is a 100 times increase in approximately 17 months. And Luke Judge's statement was this: he expects that exact same 100 times trajectory to continue from here. His words were, 100 times on the $5 billion easily. That would put real-world assets on the XRP Ledger at approximately $500 billion. Now let me put that number in context so you understand what we are actually talking about. The entire global bond market is estimated at over $130 trillion. The global real estate market is estimated at over $300 trillion. The global equity market sits at roughly $100 trillion. When you start tokenizing even a small fraction of those assets onto public blockchains, and the XRP Ledger is positioned to capture a meaningful piece of that flow, the numbers become almost difficult to process. $500 billion in real-world assets on the XRP Ledger is not even 0.2% of the combined value of global bonds, equities, and real estate. Luke Judges is not calling for something impossible. He is calling for something that represents a tiny fraction of the total addressable market for tokenization. Now let's look at what the actual data on-chain is showing right now, because it backs up exactly what he said. In the last 30 days alone, the XRP Ledger pulled in $1.5 billion in real-world asset inflows. During that same period, Ethereum saw $1.2 billion in real-world asset outflows. Capital is rotating. It is not subtle anymore. It is happening in real time on the data dashboards that institutional investors watch every single day. Ethereum's real-world asset total has dropped from approximately 18 to 19 billion last month, down to around 16.5 billion. Meanwhile, the XRP Ledger has grown to 4.1 billion on the primary tracking dashboards, and that number climbs to 5.1 billion when you include the stablecoin cash collateral layer that Luke Judges referenced. The XRP Ledger has now surpassed BNB Chain in real-world asset rankings. Just a few months ago, BNB was at 4.1 billion, and XRP Ledger was trying to catch up. Now they are at the same level, and the trajectory of the XRP Ledger is moving faster. Stablecoin supply on the XRP Ledger also just surged 22% in a single week, reaching 762 million. That puts the XRP Ledger among the top 15 blockchains globally by stablecoin supply. RLUSD alone is up 97% in the last 30 days. When stablecoins surge on a blockchain, it means institutions are parking operational capital there. They are not just looking at the XRP Ledger. They are actively running money through it. Now let's talk about what happened at Money 2020 Europe, because this is the second major story from today, and it is just as important. Money 2020 Europe is one of the most significant annual fintech conferences in the world. Banks, payment service providers, regulators, and crypto infrastructure companies all attend. It is not a crypto Twitter event. It is where serious institutional money talks shop. Ripple's UK Managing Director Casey Crock was on stage multiple times across the three-day event, alongside JP Morgan, Amina Bank, Banking Circle, and other major financial institutions. The session she participated in at the main stage was titled, "How Far Will Banks and Fintechs Go on Public Blockchains?" And here is what she said in her public recap of the event. And pay attention to this line in particular, because I think it is one of the most important things said publicly about crypto adoption in months. She said the conversation has shifted. Institutions are no longer asking whether they should engage with crypto and blockchain infrastructure. They are asking how quickly they can get on board. Read that again. The question has changed. It is no longer if, it is how fast. She also said, the infrastructure is ready and the moment is now. Banks and payment providers are moving from exploration to execution. The institutions moving now are the ones who will define the next decade of financial services. This is not a Ripple hype account on social media. This is a senior executive at Ripple reporting directly from conversations with JP Morgan and major European banks on stage at one of the most respected fintech conferences in the world. The language being used, execution, infrastructure ready, moment is now. That is the language of institutions that have made their decision and are moving forward. Now let me show you something else that is quietly building, because most retail investors are completely missing this. XRP open interest just hit its lowest level since before the bull run began. Open interest peaked at approximately $1.4 billion in January 2025. It has now bled down to near cycle lows. Now most people see that and think, that is bearish. Lower open interest means less conviction and less money in the market. But here is what that data actually means when you look at it more carefully. When open interest collapses while price drops, and then you start to see it quietly rebuild from the bottom, that is institutional positioning. That is smart money opening new long positions at low prices with low leverage. It is not the explosive, highly leveraged retail buying that drives open interest to peaks. It is quiet, methodical accumulation from players who have a 5 to 10-year view and are not concerned about where price is tomorrow. XRP ETFs are also holding steady. Bitwise, Franklin Templeton, and Canary Capital XRP ETFs are all currently in the green. Globally, XRP ETFs now hold 1.3 billion XRP, worth approximately $2.6 to $3 billion in assets under management. And while Bitcoin ETFs just ran their longest ever outflow streak, and Ethereum products bled for over 14 consecutive days, XRP investment products continued attracting capital. That is a very specific and very important divergence. The institutions running those ETFs are not reactive. They do not panic at red candles, and they are currently positioned long on XRP. Now I want to talk about the bigger picture, because there is a post circulating right now that I think does an exceptional job of laying out exactly what Ripple has been quietly assembling over the last few years. And when you see it all together in one place, it is genuinely hard to argue that XRP is fairly valued at current prices. Here is what Ripple has built and acquired. Green trading, which provides automated liquidity and foreign exchange capabilities. Hidden Road, now rebranded as Ripple Prime, which holds NYSE clearing code 0443 and FICC GSD, netting membership number 9388. That means Ripple Prime sits inside the same DTCC clearing infrastructure that settles 90% of U.S. securities. Standard Custody, providing regulated institutional asset safekeeping. Palisade, enterprise-grade wallets and cryptographic key management. All of it feeds into the XRP Ledger, where XRP functions as the neutral bridge asset. And then there is the DTCC connection, which deserves its own moment. The DTCC processes nearly $4.7 quadrillion in securities annually. The DTCC recently acquired a company holding a patent for managing digital liquidity tokens on a distributed ledger platform, a patent that explicitly names XRP. They then appointed that company's founder as the head of digital assets at the DTCC. This is not a partnership announcement on a press release. This is the organization that clears and settles the majority of U.S. securities, quietly building its digital asset infrastructure around the XRP Ledger. Ripple also holds a New York Department of Financial Services trust charter and has received conditional OCC approval to establish Ripple National Trust Bank, making it one of the first crypto-native firms to receive federal banking authorization in U.S. history. The Clarity Act is now targeting July 4th for a Senate floor vote and presidential signature. If and when that passes, every remaining regulatory barrier that kept cautious institutions on the sidelines disappears. The infrastructure is built. The licenses are secured. The clearing codes exist inside the system. The institutions are moving from planning to execution. Now let me be completely honest with you about where price stands, because this channel does not just share the bullish data and ignore the full picture. June has historically been a difficult month for XRP. Some chart analysts are pointing toward the 70 to 90 cent range as a possible downside target if current support levels fail. If XRP breaks and sustains below $1.15, the next major floor is the 1.00 psychological level, and losing that could trigger additional panic selling from shorter-term holders. Historical bear market data for XRP shows these cycles typically last between 400 and 790 days, with drawdowns of 85 to 96%. We are currently around 350 days into this correction, at approximately 71% down from the July 2025 highs. If historical patterns hold, the window for a cycle bottom is approaching over the coming months. Not necessarily immediately, but the zone is getting closer. What that means practically, further downside is possible in the short term. Anyone telling you otherwise is not giving you the full picture. Managing your position size, knowing your risk tolerance, and not making emotional decisions based on short-term price movement is as important now as it has ever been. But here's the context those chart patterns cannot capture. They do not account for XRP ETFs holding 1.3 billion XRP. They do not account for Ripple Prime sitting inside DTCC clearing infrastructure. They do not account for $5.1 billion in real-world assets on the XRP Ledger, growing at 100 times per year. They do not account for the Clarity Act approaching a final vote. Historical price fractals are built on historical conditions, and the conditions around XRP today are fundamentally different from any previous cycle. Let's close it out with your full summary for today. Luke Judges of Ripple confirmed on camera that XRP Ledger real-world assets grew from 50 million to 5.1 billion in 17 months, a 100 times, and called 100 times from here to 500 billion easy. The XRP Ledger pulled 1.5 billion in real-world asset inflows in the last 30 days, while Ethereum saw 1.2 billion in outflows. Stablecoin supply on the XRP Ledger surged 22% in 1 week. RLUSD is up 97% in 30 days. At Money 2020 Europe, Ripple's Crock reported that banks and payment providers have shifted from asking whether to engage with public blockchain infrastructure to asking how quickly they can get on board. JP Morgan, Amina Bank, and Banking Circle were all on stage for this conversation. XRP ETFs globally hold 1.3 billion XRP. Open interest is at cycle lows with institutional positioning quietly rebuilding. Ripple Prime holds DTCC clearing codes. Ripple has federal banking authorization. The Clarity Act is targeting July 4th. Short-term caution is warranted. Further downside is possible, and June is historically weak for XRP. Manage your risk accordingly. Long-term. The infrastructure being built around the XRP Ledger right now is unlike anything that existed in any previous XRP cycle. The institutions are not planning anymore. They are executing. Stay informed, stay patient, and do not let short-term price noise distract you from what is being built. If today's update gave you valuable clarity, hit the like button and subscribe for daily XRP updates. I will see you tomorrow. Stay sharp, stay patient, and as always, stay verified.